All right, a lot of people have asked me my thoughts on the current state of treasury companies, Bitcoin treasury companies, MSTR, and everything else. And this morning, I kind of just been collating my thoughts over the last few weeks based on price action, based on everything I've seen, how I kind of building my mental model around it, sort of, bringing in together things that I learned in June in New York with all the conversations I had there, et cetera, et cetera. And I kind of want to go through my current thought process on treasury companies and give you an idea of how I'm thinking about them in my portfolio. And so, I wrote down some notes here. And look, I think that treasury companies have been this new meme coin for Bitcoin, right? They are Bitcoin meme coins. They are Bitcoin meme coins that are basically on registered exchanges, the New York Stock Exchange, the NASDAQ, et cetera, et cetera. So this is now basically degen meme coin trading gone mainstream, right? But when I look at my portfolio, how I like to think about my portfolio, and again, everything I'm talking about is my portfolio here, and I'm going to talk about my investments and give you my thought process on them and kind of tell you how I'm thinking about this going forward and what actions I'm going to take. My portfolio is based purely on a risk-adjusted returns basis. To me, as I've stated many times, Bitcoin is zero. Bitcoin is my hurdle rate. In finance, we call it a hurdle rate. It's like the minimum return that you've got to generate in order to make something worthwhile. And so Bitcoin is my hurdle rate, right? So Bitcoin's CAGR, I look at it as around 30%, right? And Michael Saylor has said this, many people have said this. So I kind of look like if Bitcoin generates 20 to 30% over the next, 2, 3, 4 decades, I'm completely happy with that. It doesn't need to generate any more than that, but that's the zero rate. So that's the core of the portfolio. And then I look at MSTR, and of course, as most of you, that have been following, that have subscribed to the channel, which you should, by the way, you should subscribe to the channel right now and follow me. No, I bought, my first purchase of MSTR was on the very first trading day after they announced the Bitcoin strategy, right, in 2020. So I kind of understood what was going to happen in a different way. And then that understanding morphed, right? A lot of you guys also know that I, for a very short period of time, sold out of my, a bulk of my MSTR position, not all of it, but I downsized my position because my original thought process for MSTR was that it would be an institutional access to Bitcoin, and it absolutely was that, right? And it was better than GBTC because it was an operating company. So that was when I got into it in 2020. Come 2024, and we had the ETFs come live, and my thought process was, well, it served its purpose, so I should probably downsize my position. And so January of 2024, I downsized my position, and I was right for about 3 weeks. And then I was aggressively wrong for 3 months, and that forced me to reevaluate. And then I had to purchase, my MSTR again. And I would never be able to buy the amount of MSTR shares that I first owned. So then I understood that what had happened was MSTR was basically becoming a speculative platform on top of Bitcoin. And I said this, a year and a half ago, whenever it was, that MSTR is a speculative platform on top of Bitcoin, and that's what justifies its value. And the size of the treasury allows it to be a speculative platform. And what we've seen is that it has served that purpose, right? Because if Bitcoin's going up, you want to speculate on the derivatives markets and on the common stock of MSTR because it will go up at a higher rate, or a higher delta than the Bitcoin itself. So and also reverse to the downside, if, for example, like we've had, and this is exactly what's happened to MSTR, which is why it's down 70% while Bitcoin's down 30%, is that, if Bitcoin is about to hit a bear market, you want to buy puts and you want to short MSTR because it's going to move faster than Bitcoin. So if you're creating, as a smart investor, if you're creating a short hedge, then you want kind of like a mixture of IBIT and MSTR short positions because it would give you higher returns to the downside. It would give you accelerated returns to the downside rather than just your Bitcoin returns, right? Your Bitcoin shorts. So, and all of this is dependent strictly on the implied volatility of MSTR versus Bitcoin. And in the last few months here, MSTR, in essence, has been becoming less valuable as a speculative platform because the implied volatility of it was coming very close to what Bitcoin's implied volatility was. And so what you saw when, and so what that, to put that in simple terms, and this is why you should subscribe to the channel, because I said this a year ago, right? Like this isn't new. I know there's a lot of like Bitcoin treasury content creators that kind of put their scripts into ChatGPT and then read them out. Super entertaining, which I get, but none of this should be new if you've been subscribed to the channel. So what's been happening is, as that implied volatility of MSTR was coming closer to like 60, 65 rather than sitting at like 90, was that MSTR was becoming less of an important speculative platform. So what needed to happen was the implied volatility needed to shoot up. Bitcoin's vol was sitting at somewhere like 30 to 40 and it was going down as well. But in the dump, what actually happened was MSTR's implied volatility shot back up to 90, and that improved its value to the market as a speculative platform. The implied volatility is going to oscillate as more and more interest or trading happens around MSTR. So, you know, that is what MSTR's proposition is. And then what they've done, which is amazing, is they've created basically a business plan to issue, as Saylor calls it, digital credit backed by digital assets, digital gold, in fact, right? And he's not done anything new. This is what's crazy about this. Everyone thinks this is all brand new. We've been issuing credit against gold for a very long time, right? And so what Saylor's done is that he's done that with Bitcoin. And he's got the biggest Bitcoin treasury to do that with. And therefore, the biggest Bitcoin treasury is extremely important because institutional investors will depend and rely on that big Bitcoin treasury. And as the Bitcoin price goes up, he just gets more and more of a lead, right? So I'm stair-stepping this for you so you can understand my thinking on treasury companies right now. One of the ways that, or the main way that Michael Saylor and Team MSTR has acquired Bitcoin for its shareholders is through the ATM function. ATM function is we're going to sell shares into the market, and those shares, the revenue generated on those shares is going to be used to buy Bitcoin. And that Bitcoin, as the Bitcoin goes up, it's going to accrete value to the shareholder. So very, very simple. Sell shares, buy Bitcoin, the Bitcoin goes up, the value of the company goes up, right? And so what you've got to realize is that volume is extremely important. Volume on the stock is extremely important, right? And so what happened with, so two things here. The treasury size is important because that allows you to actually issue the credit, basically, right? Is backed by this massive treasury. Then the volume is extremely important because if you don't have volume, you cannot ATM the stock and then accrete value to the shareholder. And so these are the biggest kind of threat vectors to other treasury companies. So what happened was treasury companies saw that and they said, hey, we should do this. And so now every company that kind of was either going down or not performing as well said, we're going to launch a Bitcoin treasury company, generate volume, sell that volume, sell shares into that volume, and then buy Bitcoin with it and accrete value to the shareholder. And retail jumped on that. Bitcoin retail jumped on that and basically traded it up, and smart investors, you know, hedged their positions and traded it down. Wall Street's extremely good at finding ways to shove liquidity into something really hard and then extract that liquidity really hard when they see retail capital jumping into it, which is why treasury companies have performed the way that they've done. So, you know, from my perspective at this point, and my conversations in June in New York, I've come to the conclusions, couple of conclusions. Number one is that there will not be a ton of Bitcoin treasury companies, right? Number one, because volume matters. You've got to be able to generate volume, significant amount of volume, and that will dictate who the winners are. So you want concentration. You want absolute utter concentration in particular treasury companies, because that's what generates the trading volume. MSTR, contrary to popular belief, MSTR has not damaged its share price, right, by the way that they have sold into the market using the algorithms that they sell on a day-to-day basis. They are not impacting the share price, right? They've done it extremely smartly. Share price has gone down because people have sold MSTR, and it has been used as a derivative hedge to profit from the downforce that Bitcoin is going through, i.e. justifying its value as a speculative platform for Bitcoin, right? And so, number one, there will not be a ton of Bitcoin treasury companies. And number two, I think it's extremely important, even as a Bitcoiner, I have to admit this, Wall Street's not going to allow Bitcoin to be the only crypto. And the reason for that is how these guys make their money is that they overcomplicate the shit out of things and then charge you a fee for managing them, in simple terms. So Wall Street wants a portfolio of things because then they can create a portfolio to manage. And so there will not be one crypto that wins. Bitcoin will be the biggest winner, but there will not be one that wins. And at the same time, I think that there will be one treasury company that wins the outsized amount of capital, and the rest of them will oscillate around that treasury company. And so therefore, going back to my thinking about risk-adjusted returns, and I'm going to start piecing this together, Bitcoin is the zero rate. As I've said, a portfolio to me in previous videos is three things, right? You've got a savings bucket, an investment bucket, and an income bucket. Bitcoin is the savings bucket. MSTR is therefore the investment bucket, right? Because it generates higher than the hurdle rate. The hurdle rate is Bitcoin. So MSTR will be the outsized winner in terms of attention, volume, and everything else, because it's got the biggest treasury to do that with, and it's got the biggest way, the easiest way to issue digital credit or credit against the digital gold. So what that means is there cannot be a ton of Bitcoin treasury companies outside of retail being involved and retail pumping volume. And the problem is that over this summer, retail has been significantly damaged, in my opinion. Retail has been, the psyche of retail has been incredibly damaged. Wall Street came in, they did the pipe investments, they did all of that, and that's been fantastic, and a lot of them made a lot of money. But that's kind of like it was kind of like a cool thing to do, right? I don't think this is going to be a continuing well that they can attack. So I don't think that Wall Street's going to come back and do that forever, because at the end of the day, they realized what they were doing. They were issuing these stocks. They were relying on retail to come in and pump the volume up, and then they were extracting from that volume for profit, right? And so realistically, from my perspective, there's probably 3 or 4 treasury companies outside of MSTR that seem kind of interesting. But then you've got to look at it and go, okay, so one of them might be Metaplanet. But Metaplanet faces threats to its volume, which MSTR has already passed. MSTR's volume was attacked when IBIT launched, because now the people that were using it as a de facto ETF suddenly sucked the volume out of that and put it into IBIT, right? Metaplanet hasn't faced that yet. So Metaplanet has got to deal with what happens when Japan and all of the Asian surrounding regions start launching their own ETFs, and what happens to the volume of Metaplanet if there are other threat vectors that come into it, right? And one of those threat vectors, by the way, is MSTR itself, What happens to Metaplanet if MSTR does a launch in Japan? And I know I saw Michael Saylor say to Simon that he wouldn't launch anything in Japan for 12 months at Bitcoin UAE conference. But I want to remind you of a story of Steve Jobs, who looked the reporter dead in the face and said, nobody wants to watch video on an iPod. And that was 3 months before they launched the video iPod, right? So I think that all of these are real threats, right? And then you look at 21 and Strive and all these other companies. So the way I look at it is, I'm not comparing a Bitcoin treasury company, not including MSTR, to Bitcoin. I think that's where the mistake is. I'm comparing the risk-adjusted returns of a treasury company to MSTR. And if Bitcoin's CAGRing at 20 to 30%, and MSTR is CAGRing at 40 to 60% over an extended time period, how much more do I really need a treasury company to generate in order for me to justify putting my capital at risk for that elevated return? It probably needs to be like 70 to 90% CAGRs. And I don't think that's possible. So not only do I have to pick the right treasury company, they have to actually navigate all the threats. There are threats that we don't know, we can't quantify. We don't know what's going to happen, for example, in Japan or the UK or any of these places where you have ETFs coming in, right? You have options coming in. You have different things coming in. You have MSTR launching their fixed income products in those countries. You don't know what's going to happen. So the risk, I'm not saying that they're all going to fail, but I don't know what's going to happen. So on a risk-adjusted basis, the return has to be so high in order for me to justify not just holding MSTR. And so that's really my conclusion on all of these treasury companies, right? And of course, I got caught on activity bias. I own basically pretty much all of them, like a little pieces in all of them. There's nothing crazy part of my portfolio. But I think retail is damaged, significantly damaged. I think that volume is absolutely the king of that industry. And I think volume is going to focus in on a couple of companies. The winner will be MSTR, simply because they have the size of the treasury that matters to allow you to have a speculative platform on that particular asset. And I think there's a lot of threat vectors coming in to attack volume. And so my thinking is, while it's been a very fun summer, that I want to put sell orders on all of my Bitcoin treasury companies minus MSTR, obviously, which I see is different, and just roll all of that back into MSTR because the risk-adjusted returns are not worth it. That's my thought process on it. And I think that while some of these companies will generate higher dollar returns than MSTR, they absolutely will. It will be in momentary periods, and it will be, it will be like a 3-week window when they are generating an outsized return on MSTR, and then I have to become a trader in order to justify, okay, can I actually get out of this position at the right time? And as we all know, 90% of traders lose money. And so I don't want to be in that position myself. So no matter what excitement you see coming out of it, coming out of all of the YouTube creators and communities on X and all this other stuff, think like a professional investor, think in terms of risk-adjusted returns, and understand that MSTR at this point, with the fact that they've been proven with the size of the treasury, with the fact that they've been proven with, the threat vectors that they've had to deal with in terms of IBIT, two drawdowns now, two massive drawdowns in Bitcoin, massive FUD cycles, et cetera, I think it's extremely powerful to be an MSTR holder, and I continue to hold my position and increase my position. But I don't know, in fact, it's not that I don't know, it's not fucking worth the risk-adjusted returns to hold any of these other treasury companies going forward, especially as Wall Street starts concentrating them into a small group of holdings. The interesting one is 21 with the partners that are involved, but I think that's going to go down a different path. I'm going to do a video on that, so make sure you subscribe to the channel for that. But overall, I have placed sell orders on all of my treasury company positions besides MSTR, and I will, as and when the markets will pump, right? They will recover at some point when Bitcoin starts going up. And as and when those come, that liquidity gets freed up, I will roll it back into MSTR, because the reality is that the risk-adjusted return is all that matters. And I'm not a professional trader. I'm not a trader. I've never traded. It's not something that I do. I'm a long-term holder, and I think MSTR has the best, risk-adjusted return from that basis. And I think if you're sitting there going, I want to generate 90% CAGRs to justify the risk-adjusted return on MSTR, I think you're being greedy, and I think you're going to get slapped by the market quite hard. So remember, MSTR is the most proven, has faced the most threats, has come out on the other side, is doing really well. Other people are copying. JP Morgan is copying MSTR's way of issuing credit against digital gold. This is all extremely bullish for MSTR, and I don't know what you think, I do not think it's worth the risk-adjusted returns to try and speculate in all these other treasury companies, and I leave that over to traders, and they'll do a great job. Some of the traders will do a great job, some of them will lose everything they have, and at the end of the day, what we do know is that Wall Street will be profitable. So for me, I've placed sell orders on all Bitcoin treasury companies in my portfolio outside of MSTR. I will roll all of that revenue whenever it comes back into MSTR. And I think that's the best position to be in going forward here because of the risk-adjusted returns and my portfolio. Because ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.